Let's bring on board the management of the company. We do have with us Ashish Jaknawala, Chairman at the company, joining in with us, as well as the Managing Director of the company. Thank you so much, Ashish, for joining in with us on the show. Let's start by talking about such a great number that's come in from the company. While we're also seeing the industry that has seen a good growth, what is it that you have in terms of an outlook that one should expect, as well as for FY25, do you think you would do better than this in terms of the growth rate?
Yeah, thank you for having me here. Sorry for a bad throat. But we're pretty happy with what we've delivered in FY24. If you were to look at the numbers, we always are referring the investors to not just the reported numbers, but also pro forma numbers. Pro forma numbers are important because we made an acquisition in August. So the period between April and August is not consolidated into our financial statements. But when you talk about FY25, it actually is a basis what we own today. So if you look at from a pro forma perspective, we achieved a strategic milestone of doing more than 1,000 crore revenue in FY24. Basis that our EBITDA pre-ESOP expense was about 368 crores. Now, pre-ESOP is important because the ESOP expense in FY24 was one time really high, about 46 crores. This number reduces to almost about 17 and a half, 18 crore in FY25. So overall, we remain very, very bullish. And you did in your introduction mention about the margins. And it's important to mention that during FY24, about 7% of our margin erosion happened on account of that one-time ESOP expenses and also slightly heightened corporate G&A. That's also largely because of the acquisition we had done in August. And by the time we closed our financials, we had done most of that settlement. So you will see much stronger numbers coming up in FY25. This is that.
Hi sir, Soumit Sarkar also joining into the conversation. Now if you look at the trend of the average room rent, it has been continuously on an upward trend. On a YOY basis, we have seen a 13% growth to around 6,279 rupees now. Do you expect this number to settle in near the Q4 numbers, or is there more upside to this number?
So, what we are noticing is quite marked difference between, and, I would mention RevPAR and not just average room rate, right? Because in our business, quarter on quarter basis, you will see some variation between where the occupancies are going and where the rate is going. So overall, our RevPAR growth was very healthy at about 17% year on year and also for the quarter, right? What we are seeing really is that the large office markets like Bangalore, Hyderabad, Delhi, they continue to grow almost at 20% RevPAR growth year on year. We also have a very widespread portfolio in some of the other markets. So generally, given the nature of our portfolio, we expect to maintain pretty healthy RevPAR growths. We've been consistently saying that on a long-term basis, we see the RevPAR growth to be anywhere between high single digits to early double digits. 17% is fantastic. We are seeing good momentum in the first quarter, even though there's some bit of a dampening effect because of elections. But we think the industry is well set for delivering high single digits to early double digits RevPAR growth for next several years.
Indicating somehow that Q1, though it should be a strong quarter for the hotel industry because of the election period, there could be a slight decline on a YOY basis this time?
Not really. We don't expect any decline on a YOY basis. I think what's important to understand is that not just us, most of our peers have done extremely healthy growth on a YOY basis in the previous quarters. In the first quarter, we may see that extent of growth may be slightly slower on account of elections, but you're not really seeing any dip on a YOY basis.
Okay, one more thing. In Q4, if you look at your performance was impacted because of shutdown of one of the hotels. It went under renovation. When is that expected to come online?
So first of all, the impact of that was marginal. It's a small hotel in Greater Noida. But I think what's more important is that by September, October, we expect to open 300 additional rooms. Obviously, those 300 rooms have no impact on our revenue or EBITDA in the last quarter, or actually for the last 2 quarters. So for H2, we obviously take benefit of those 300 additional rooms on top of our existing 4,800 rooms. So that's going to be a significant impact on our H2 performance in the current fiscal year.
Okay. And Ashish, just want to understand in terms of hotel additions, what is the plan there? What is the outlook in terms of expansion? Any new areas that you're looking at?
Yeah, so I think what's really important is that, we took the company public in September. We had some historical baggage of leverage largely on account of COVID. All of that is past us. Quarter 4 was very healthy for us on 2 factors. One, of course, we turned PAT positive, so from having reported almost 70 crores PAT losses in the previous quarter and quarters before that, We've kind of had a turnaround. We've turned PAT positive now. We've also accumulated additional 100 crores of free cash in the last 6 months from operations. So we're now seeing almost a run rate of about 200 crores of free cash at the same revenue level, Add to that our existing cash balance of about 260 crores. So we have a reasonable firepower to look at opportunities. And as you know, Samhi has over the last decade largely grown looking at acquisition and turnaround opportunities. We've tracked the markets where we believe Hyderabad, Bangalore, and rest of the big office markets continue to be very attractive. We believe we have a very healthy pipeline, but I wouldn't want to comment on that till such time we've not really secured something. But we have the firepower, we have the experience, and we're tracking opportunities in the markets that we really like.
Absolutely. And Ashish, just one more last question from my side, that is in terms of debt, because that's significantly reduced, 2,800 crores approximately, now at 1,800 crores. Furthermore, what's the reduction that we would be seeing in FY25?
We've always indicated that we feel that a leverage level between 3 times net debt to EBITDA to 3.5 times net debt to EBITDA is possible in the near term. So we continue to move towards a target to getting closer to 3.5 times net debt to EBITDA by the end of FY25. It'll actually happen on account of two factors. One is we are seeing very healthy growth of EBITDA itself, right? So when you look at leverage may remain constant, but the EBITDA is really growing at a rapid pace. We're adding 300 new rooms also. And the second, of course, is the impact of cash that we're accumulating because of the positive cash coming from operations. So our guidance has always been that we expect this company to get to about 3.5 times net debt to EBITDA by end of FY25. And beyond that, I think you'd like to stabilize it in the zip code of about 3 times net debt to EBITDA.
And lastly, sir, before we let you go, could you just give us some guidance on the revenue front, occupancy level that you're looking for FY25?
We abstain from giving any specific revenue guidance, but what we are very certain about is that capacity utilization remains to be very healthy. I would request all of you to not get perturbed about 100, 200 basis point movement up and down. It's a very variable business. So you should see occupancy levels remain in the 70 to 75% zip code. I think the big opportunity is the fact that there is a very favorable demand supply equilibrium for hotel industry, especially for Samhi in the markets that we are situated. So we would continue to see the RevPAR growth being driven by rate increases. And I think there is a reasonable headroom for rates to grow in those core markets over the next, I would say, at least 8 to 12 quarters.
All right, Ashish, thank you so much for joining in with us this afternoon on ET Now. It's a pleasure having you on the show. And thank you so much for talking about the guidance of the company going forward. That was the management of Samhi Hotels joining in with us. But with that, let's just slip into a very short break. We have a whole host of managements lined up for you even after the break.